Hello everyone, welcome back to Lab for Crypto. Today we're going to have a different kind of video. It's not going to be the usual me try to explain you all these models that you see on your left side and help you improve your understanding of these models and make informed decisions using them. But it's centered around the three most common questions that I got from you recently. The first one was centered around the recent expectation of the market for rate cuts. So the market is expecting 3 rate cuts in 2024 and the first one to be in June with 69.4% probability. Your question was if that is bullish or bearish for Bitcoin in the short term and also in the long term. The second question was centered around this article from CoinDesk. A lot of you, after seeing this article, you were afraid that actually institutions are not going to join this bull market, but they are going to do it in the next one. This article, based on data from BlackRock's IBIT spot ETF, showed that the hot start for the spot ETFs actually came from retail investors and not institutions. And the biggest concern of yours was that because Bitcoin is a volatile asset and risky asset, institutions are not going to join in this bull run. And therefore, all these projections and for 6 and 7 figure prices that people are seeing online due to the institutional adoption for Bitcoin are not going to hold, and therefore we need to be cautious. And I will explain why I believe this article is actually bullish and not bearish. And then the third question was centered around the power law. In the recent weeks, we saw in the crypto Twitter to be split in two camps. The one camp believes that the stock to flow model is superior to the power law, and the other camp that the power law is superior to stock to flow. I sat down, I did the maths, and actually we are going to include them in our platform so more people will be aware of the power law model. And based on my professional experience as a PhD in physics, I will tell you that this model is hands down better, in my opinion, than the stock to flow, and more people should be aware of it. And the question that actually people need to ask is why we see this power law behavior in Bitcoin when we check the addresses, when we check the price, when we check the hash rate, and why it is similar to what we see in nature. Actually, in physics, most laws are basically power laws. For example, electromagnetism, that is something that I think most of you know from school. But anyway, my, let's say, idea about this model is that it's superior and we need to study it and we need to go more deep and understand why we see this number, the 6, the 2, the 3. And if we use the same math to another blockchain with similar tokenomics, we will see the same behavior. It is independent from the tokenomics. It's only correlated with adoption. What actually makes Bitcoin unique and it has this behavior? So instead of losing energy and time on trying to debate which of the two are correct, it's better as a community to spend time and verify the result and understand in depth why that occurs. Let's move to the first question, and I will come in the power law model at the end of the video, but I will not go in depth on it as I will have a dedicated video in due course for this model. Let's move to the power cuts. Let's deep dive into the graph. The blue line shows the Fed rates, which now we are at 5.5%, and the candlesticks are showing the Bitcoin price in monthly time frame. And what we want to check is if Bitcoin had a similar situation where the rates were high, and now we are expecting the rates to go lower. As we saw, the first rate cut is expected in June 2024. And the only situation where Bitcoin had rate cuts was in June 2019. The first rate cut occurred in July 2019, and what we can observe is that the Bitcoin price actually was dropping until the Fed rates were at 0.25%, and then we had a massive price increase as the full quantitative easing happened. But for us, what we can do now in the short term, based on this graph, you will see that the Bitcoin local top was occurred 1 month before the rate cut. So in June was the local top, and then in July, Bitcoin price dropped. And if we go to this table, which the probabilities currently are at 69.4%, that means the local top for Bitcoin is expected in May. But as I said, we only have one data point, and therefore anything can happen, but it's good for us to know that. As for me, if I have my normal indicators signaling again that the risk is high, like we had the video recently when the Bitcoin price was at 73K and we said that the risk was at 82%, that means if in May I have a similar situation and my risk indicators are showing the same, that the risk is high, that means history can repeat itself and we can start seeing Bitcoin price going lower. Now you can ask me why that happens. And the reason is that the markets are not sure that the Fed did the job well. And if we don't see when the rate cuts occur for a couple of months, that the data that we have are starting to show that it's going to be a soft landing and we're not going to enter a recession, they are going risk off. They are protecting their capital in case we enter a recession. And when the markets are sure that we are in an environment of quantitative easing and the market and the economy is healthy, you will see this huge price increase in risky assets like Bitcoin, for example. And the same behavior is observed on Ethereum as well. The local top was a month before the rate cuts. And again, it was moving lower until the markets were sure that the economy is in a situation which it can run to higher prices. And therefore, when you're starting to see that the risk, for example, of Bitcoin is high, either you need to move your capital to USDT or gold or whatever. That is not a financial advice. You will choose how you are going to protect your capital. And especially some people, because they do not want to move out from the crypto market, they move their altcoins to Bitcoin to protect it from higher losses, because usually Bitcoin has not that severe downtrends like altcoins, of course. Moving forward, we are going to answer your second question. Your next concern was about this article from CoinDesk, that it was showing that actually Bitcoin hot start from the spot ETFs was largely driven by retail investors, which that means people, normal people, which they have stocks and they more used to have regulatory clarity, they transfer some of their capital to Bitcoin. But that was not from institutions. Institutions, of course, they don't have an average buying of 13K, they have millions of purchasing power. So many of you told me, okay, because Bitcoin is a volatile asset and a risky asset, that means actual institutions are not going to join in the near future. And for me, I believe that it's going to be the opposite. That is really good news that for me, the retail investors have driven the spot ETF rally. And institutions, they're gonna have to acquire Bitcoin, in my opinion. When you have the US public debt increasing exponentially, and we can see from data in the last 55 years that this is the case. And for me, there is no way that they're going to be able to control that. And I have made a video before about the USA public debt, and also show a video that the chairman of the Fed said that debt is uncontrollable and they need to do something, but I do not find an easy way out of the US debt. And probably they're going to start the printing machines, and eventually you will see dollar go to zero. And the same thing you will see with euro. Euro is 99.35% down compared to Bitcoin. And institutions are going to, they need to find a way to protect their capital. And the way to protect your capital is using an asset which has a fixed monetary policy that you can control, you understand. It's there's no one that can start printing money like what happens to governments. And therefore, they need to transit and find assets that they can help them against this depreciation. Someone can say that gold can do the same thing, and you will be right, but in my opinion, Bitcoin is far superior. And also, regarding your volatility question, if we check, let me show you something. This graph is showing the Bitcoin realized cap. Bitcoin realized cap is a different way of calculating the normal market cap. In stocks, everyone knows the market cap, but realized cap is something unique to blockchain and Bitcoin in general. Realized cap is calculated based on the time that a coin is moved. For example, if someone mined Bitcoin when it was a couple of cents, and then he didn't move it for the past 14 years because probably he lost the keys, that means the value of that coin is not the same as a one coin that is moved today. As this coin was moved when it was, let's say, for simplicity, it was $1, and he probably lost it. And one coin that is moved today is worth 66K, which is the price. And the reason that we do that is to eliminate and remove the coins that actually are lost or people are not planning to use them for I don't know what reasons. Maybe they want to sell after many years. What you will see is that the realized cap actually is not volatile at all. It's actually increasing steadily, and the volatility is for the upside and not the downside. And if you check the market cap, of course, you will see the bubble regions where the market is speculating a lot. You will have the people which they use high leverage to try to get the most of these bubbles, and usually they get wrecked. But anyway, the important thing is if someone which is an institution and is not planning to planning to sell in the short term, like a pension fund or a big institution which they are not traders, and you're going to consult them, let's say, when is a good time to sell Bitcoin, for them it's actually never, because they have a longer time frame. It's not like normal people which they want to increase their Bitcoin holdings as fast as they can using the data that they have, and they care about the day-to-day price action for Bitcoin. Institutions usually they have a time frame of 5 to 10 years, and they think and they act in a different level than retail investors. And to close up, that is why I believe actually institutions are going to come big for Bitcoin, because it makes sense. And it's simple as that. I'm going to close with your third question, which was about the power law, which is a model that it was recently come to light, but actually Giovanni developed it in 2014. And you asked me if that model is superior to stock to flow. And I'm just gonna say it bluntly, that it's far superior. And for us, instead of fighting and trying to comment in every post that Giovanni is making about this post with things that for me do not make sense, and sometimes I see posts from people that they didn't even spend 10 seconds to study the models, is the community needs to spend time and actually understand why that happens, with not guesses if that is going to be the monetary policy of Bitcoin because the inflation is fixed, or because of the Metcalfe law, or whatever, which can be any of that. But for me, we need to spend time, instead of fighting the model, try to understand why that works and why we see this power law everywhere in Bitcoin, which actually nature loves power laws, because as a physicist, well, there are countless number of models and actually equations that the nature acts in power laws. And I will have a dedicated video about all that, so I don't want to get too long about the power law. But because you asked me about my professional opinion as a PhD in physics, I will tell you that yes, this model for me makes sense, and if you spend some time, you will see that yourself. And now the important question for me is to answer all the other important questions, which is why. We need to understand why that happens, and if the same behavior is going to be observed in a similar asset, which can have the same attributes as Bitcoin. Because if that is not the case, again, we need to understand why. Because Bitcoin was adopted first, and even if you have a model and an asset which has a similar attributes to Bitcoin will fail. That are the most interesting questions for me about this model. And definitely you need to watch it. And that's why I decided to have it in the platform. And we're going to have a special section which is going to be about the power law. And I'm going to have all these graphs inside so people can monitor the values every day, and hopefully I will contribute more in understanding the model and improve our understanding around it and why that is the case. I hope I answer all of your questions. Do not forget to like the video and give us your opinion. So leave a comment below. And until next time, bye-bye.